While EBITDA matters and it's the variable most highlighted in deals, it is not the end of the narrative for selling a business. It's really just the beginning. I'm Arthur Petropoulos, managing partner here at Hillview Partners. We're an M&A capital advisory firm helping companies generating $1 million to $10 million a year, pre-tax earnings or EBITDA, sell their companies, and secure capital. In today's video, we want to talk about the three-legged stool of business valuation that includes EBITDA, however, is not limited to it. So it'll be a briefer video. However, take the brevity as an indication of the importance of these two other variables in addition to EBITDA. And so EBITDA, pre-tax earnings of the business, is the one variable of valuation. Oftentimes, the multiple applied to that EBITDA is how most people think of the value of a business. And so someone would say, I generate $2 million a year in EBITDA and I'm selling my company for 7 times that. And so it's $14 million value. How is that multiple tabulated up or down? Most of the time, you're going to see that as a business has certain values that we've talked about in kind of the EBITDA hierarchy in other videos, that as EBITDA grows, the multiple gets higher. But what enhances that or what detracts from it? That's what we want to talk about today. So 2 things we want to hammer home today: access and capabilities. There's 3 elements to value of a business. It's fundamentals, EBITDA, access, and capabilities. So first, looking at access, what is access? It's the idea of you as a business, the product you sell, the service you provide. Who do you have access to? Who do you serve? Whose problems do you solve? Whose greatness do you enhance? Who do you give a benefit to? And we can think of access in terms of 3 different lenses, if you will, depending on what kind of business you have. So the first of these is going to be demographic. Who do you serve? Is it men? Is it women? Is it children? Is it old people? Is it young people? Is it people of certain ethnicities? Is it people of certain backgrounds? People of certain professions? People of certain businesses? And you can break it down if it's a B2B business in the same way of what is kind of the general categorization, if you will, of the business that you're serving. Now, the second access lens, if you will, is geographic. Now, perhaps you serve a very broad customer base in terms of who the people or who the businesses are. However, you are limited or focused, let's say, in a particular geography. And that could be a state, it could be a county, it could be a country, it could be a hemisphere, it could be a continent. But how do you define it? And that is important. And third, it could purely be an industry. And this you'll see more so in B2B businesses. We serve companies in the software space. We serve companies in the heavy industrial and manufacturing space. We serve companies in the chemical space, in the healthcare space, so on and so forth. But anytime you have a business, you have how much it makes is the fundamentals. Then you have the access, and to define that access, which will allow for an enhanced EBITDA multiple, you want to define it either on demographics, geographics, or industry. Now, the third prong of valuation, again, fundamentals, access, is capabilities. And what do we mean by capabilities? What do you do that's special? What edge do you have? What is proprietary? What is unique? We've hammered this home in so many of our videos, but what is proprietary? What's the special sauce of the business? What makes it different than everybody else? And when you want to take that down a level or get even more granular, we say, what is the product, service, or offering that you as a company provide to your customer base? Now, let's say you provide a certain type of task force software. Let's say you provide a specialty consulting service. Let's say you manufacture a certain thing. Let's say you clean a certain thing, you change a certain thing, you certify, test, measure, gauge, balance, whatever a certain thing, right? But again, service or offering for the business. Really, when we think of capabilities, we think of 3 subcategories of capability. So the first of these is uniqueness. If nobody else does a particular thing, either because it's difficult, it's dangerous, it needs a certain level of specificity. So this could be diamond grading, this could be asbestos abatement, this could be special high-end computing work for data centers, whatever it may be. If it is unique, then it is an interesting capability. It is an enhancing capability. Second, is it faster? You can do a very similar service to everybody. You put a roof on a house, you pave a driveway, you code a software. But if you do it faster than everybody else, that can be a defining characteristic. And third is, are you more effective? And what I mean by that is, does the buying of your service or product provide a higher probability that the desired outcome is going to be achieved? And so if someone hires you to clean windows, what is the probability that your windows are going to be spotless versus anybody else's? And so is it a higher probability of getting the desired outcome? If you have a specialty consulting firm that gets pharmaceutical companies FDA compliance for their new laboratories that gets them clean room certification, whatever it may be. If the probability of hiring you is a higher probability of the dream outcome, let's call it, of the objective they're looking to accomplish, then that person will pay you more, or that person will hire you more and tell all their friends about it. It will be a special capability of the business. And so, recapping the idea of capabilities, we say uniqueness, speed, or effectiveness, or efficacy. Now, what we will not say relative to capabilities is price. There's not many businesses at the scale of 1 to 10 million in EBITDA that are competing on price or competing on just the cost of capital. You want to be doing something special that you are a price maker, not a price taker. Now, in every business is going to be pressures from certain clients, from certain deals, from certain projects. However, generally speaking, price is not something that we deem as a capability. And so, recouping today's video, you have EBITDA of a company, you want to apply a multiple to that. That multiple is going to be somewhat dictated by the size of the EBITDA, as we've alluded to in other videos, but the two other factors, the two other legs of the stool that are going to determine the multiple applied to EBITDA, either enhancing it or detracting from it, are access and capabilities. Breaking down access or recapping access, we have demographics, geographics, and industry. And breaking down capability, we have uniqueness, efficacy, and speed. When creating the narrative for a business, if you can define the EBITDA, or the cash flow generating power of the business, define the access relative to these three prongs, and define the capabilities relative to those three prongs, you'll have a pretty well-rounded narrative of the business, a strong foundation from which to negotiate for the optimal terms, whether you're selling a business or securing capital. So that's the thought for today. Hope the week's getting off to a good start for everyone. Keep pushing forward. God bless. See you next time.